Okay, so we are here in Paris at the Ethereum Community Conference, and Joe Lubin was kind enough to take some time and have a chat with us. So I have a couple questions, but I'm really just excited to see what you're excited about for 2020, ConsenSys and Ethereum 2 and all the stuff that's coming. So kind of to start with that basic idea and then maybe see where that takes us. What is the excitement for you about 2020 on the ConsenSys side? Lots of stuff's happening.
So I think the biggest thing that we're excited about is seeing the constant development in the ecosystem, which is taking us to the point where little by little we're going mainstream. And so we're going mainstream with respect to games starting to use blockchain, whether they're natively blockchain games or whether they're just games that are also making use of tokens and blockchain. Open decentralized finance is really starting to ramp up, and so that's essentially we've built a new trust foundation, an objective automated trust layer, and that gives us the ability to create financial protocols, magic internet money Lego building blocks, right, that can essentially replace the older financial protocols that are run by banks and central banks and insurance companies, etc. These new financial protocols are just going to be so much more secure, so much more powerful, so much more granular, so much more rapid in terms of value creation, and essentially unlike where the old financial protocols are run by the priests of the system behind the central bank edifices and the commercial bank edifices, these new financial protocols are going to be accessible to everybody. So the same systems that central banks and major banks are running going forward at some point in the near future are going to be the same systems that we're going to be able to run as people. So you'll be able to have your own bank in your pocket effectively. Lending protocols, automated portfolio management, prediction markets, insurance systems, they'll all be directly accessible to you or anybody really. And the other element of going mainstream is enterprise. So whether it's us building things for companies, and we do a lot for financial services, but also Procter & Gamble, GlaxoSmithKline, with respect to supply chain track and trace, provenance of materials, whether it's consortia, so we do that sort of work. We've done a major platform called Congo, another one called Covantis is getting built right now, major commodity trading platform, or whether it's thousands of enterprise who are about to find out tomorrow on March 4th through an announcement that ConsenSys is making with two major global enterprises. Companies are going to be able to engage in information sharing or deals, shared business processes. They're going to be able to sort of entangle their information in interesting ways using a technique called zero knowledge proofs, and all of that is going to be able to operate on public Ethereum mainnet. And so 24 hours it gets announced, and I think it's going to be an inflection point in how enterprise starts to use the Ethereum technology. Enterprise has been using the exact same technology that we built that powers 10 billion queries per day in the public Ethereum ecosystem that is cleared and settled over $1 trillion in transactions. All of that is now being used in private permission contexts by enterprises, and now enterprises are coming to mainnet.
Very cool. So to address both of those, but start with maybe the decentralized finance idea. And this last year we saw tremendous movement in the CBDC space. Libra really kind of launched a panic with a lot of the world's central banks, but also then other corporate consortiums or other things. We see China potentially. They got something in beta that they're working on that is not technically maybe blockchainy in the way that everybody would like, of course, but. How do you feel? So we have obviously the sovereign ideas, the central banks launching CBDCs. We have the corporates like the consortiums like Libra that are coming up with their ideas, and then we have the decentralized versions of digital currencies. How do you feel? How do you see all of that kind of interfacing and working together with the truly public permissionless systems?
So we have utility tokens, tokens like Ether. Tokens for decentralized storage and decentralized bandwidth, and we'll have other decentralized protocols that have their own tokens. Those are tokens that aren't price stable, say price stable with respect to gold or the US dollar, and so they have their own utility on their networks, and maybe they shouldn't really be used to buy coffee or to as a store of value. You might invest in them, just as you might invest in oil, perhaps.
As a commodity, as a tool.
If you think oil is going to rise in price. And so we have different kinds of stable coins on the Ethereum platform. Maker DAO has a stable coin called DAI, which is in a sense frozen Ether. So it is price stable with respect to the US dollar. It's an over-collateralized system, so you put a whole bunch of Ether into a smart contract, and it lets you pull out a price-stable currency, and you can use that as money. And there are a whole bunch of other price-stable currencies. I think there are 200 of them in the world right now, and most of them are operating on the Ethereum platform. And that's incredibly valuable. We brought a price-stable token, which makes commerce much easier. It makes delivery versus payment transactions much easier. We use these tokens to issue bonds, and major financial institutions have issued bonds on Ethereum, on public mainnet Ethereum. We issue equities in the form of tokens, and now we need essentially money to be able to pay for lots of different things on the platform or off the platform. And all of that is either permissionless, or some of those price stable tokens are based on assets in a bank or assets in a gold warehouse, and those are more permissioned, but still on the public blockchain. Okay. Those are very different from, say, a central bank digital currency. Most central bank digital currencies will use cryptographic primitives that are similar to what blockchain uses, but they probably won't be based on blockchain. They don't need to be based on blockchain. They're essentially centralized systems anyways. Some of them, there may be some central banks in the world who prefer the idea of building on blockchain because they can decentralize either for robustness, or they can potentially decentralize so that there are actually these tokens that are moving around on those networks that are genuinely owned by the people who are using them, and they might accept genuine privacy of stakeholdership of those tokens and confidentiality of transactions. So blockchain is a very powerful technology, and those central banks, those societies are going to have to figure out how they want to apply that technology. I don't expect China's going to go for a privacy coin. I do think that there may be some nations in the world that will, I'm certain there will be nations in the world that offer a central bank digital currency that enables some privacy. There may be backdoors in special circumstances. They can take a look at those transactions. It may be that under a certain threshold of value, then it's perfectly private and confidential, and over a certain threshold, then they can open that back door and see what you've done. So we will see how that all plays out. And with respect to commercial banks issuing different currencies, I think there should be choice. There should be choice in the money that we use. There should be choice in the payment systems that we use. And there's really good reason to have systems like Libra with many different kinds of characteristics that serve lots of different actors in different places. So I wouldn't want one Libra system run by an organization with as many global citizens as Facebook, because that's just too much power. Facebook already knows way too much about you. They collect data from your devices and other databases, and they just shouldn't also be tracking our financial history and all of our financial transactions to that sort of level. So I'm not a fan of a Facebook money because Facebook would end up probably controlling monetary policy for small and medium-sized nations, but I'm definitely in favor of lots of different Libra-like systems so that we can explore the solution space and give, say, small nation states who have volatility in their currency and the citizens of those nations the ability to have a price-stable currency and the ability to buy easily across borders. When you're buying across borders, it's not the shipping that's the issue. Most companies will ship. It's having a payment system that will enable you to make that purchase.
Yeah, with the Swedish e-krona project that they're currently starting to test for the next year, and their idea is Sweden's already only 10% cash-based transactions. So except those are all going to third parties to have to deal with them. So their thought is, as the government, should we not provide a service? We provide the service of cash. Should we not provide money in the digital way that people want to use it, instead of having to force people to go out and look for a commercial solution to do that?
Sure.
So it looks like everybody's coming at this with different degrees. Whether or not privacy will be baked into that or not is going to be a big question. Okay, great. Well, I think that the last piece, just because you touched on a little bit, and I think it'd be interesting to complete around that idea on the decentralized finance side. We see last year a tremendous amount of interest in tokenized securities. It doesn't seem like the retail investor side of this is really scaling to match the potential yet, but definitely the people who are already putting money into real estate, in an intellectual property like patents or music or film or all these different things, tremendous amounts of money now being pushed into things that are being tokenized. Do you see with Codify, with where you're seeing a lot of things go in tokenization, how do you feel about tokenized assets in 2020, 2021?
We're still very bullish on tokenized assets. Essentially, digitization and tokenization they're one of the forces that's going to rapidly transform society into the age or the Internet of Value, into the age of automated objective trust, into a much more digital age. So the ICO token boom was very exciting. A lot of that was about utility tokens. A lot of that was about people thinking that they were issuing utility tokens when maybe their securities regulator didn't agree with them. And so there's been a bit of a backlash, and we're still seeing the issuance of utility tokens. ConsenSys has, and I have been involved in issuing utility tokens since the start of Ethereum, essentially. And we will see the issuance of lots of tokenized securities. Tokenized securities are going to be a better form of security, and it's just a question of putting all of the tools into place so that you have full life cycle on these tokens, where you have secondary trading and liquidity pools and decentralized exchange and liquidity, essentially. But I strongly believe that essentially, when you have decentralized protocols, you get trust from that, and you derive two major characteristics. One is digital scarcity, which gives you these tokens, whether it's cryptocurrencies or other kinds of assets, and collaboration. So we have these trustful collaboration networks, and in order to incentivize people to participate on those networks or share their resources, usually there's a token that's issued by the protocol, and so those are utility tokens. In some cases, they may have some money characteristics or even characteristics that look a little bit like equity, but many of those tokens can be issued if they're essentially holding a group together, a collective that has a lot of different people or organizations in different roles, and they're creating value in their ecosystem. And so we will continue to issue those utility tokens. We have in our commerce and decentralized finance group, Codify, we have a project called Activate, or a product called Activate, that enables the definition, the issuance, the trading, the full life cycle monitoring, and the standing up of these networks, where essentially a utility token, like the Scale token for Scale Networks, is one of the projects that Activate is essentially helping activate.
Right.
And these utility tokens, I think, are going to be incredibly important going forward. We envision a world of many different kinds of collaboration networks that we work on in different industries or across industries, that we play on, that we learn on, and so it's going to be a world of many overlapping collaboration networks, and we will hopefully activate lots of those.
Right. Well, it's exciting. I appreciate the bullishness and the optimism. It's fun to hear and to see. And thanks for everything that you're building and the energy you bring to events like this to excite people into building. I guess maybe the only other thing that I thought was interesting as we wrap up, since we're here, is this push towards the 1 million developers idea in Ethereum. As you see this crowd that's here and all these different projects.
There are about 1 million of them.
Yeah, I think they're already in the building.
Yeah,
so.
exactly.
I think that's not really a question. I think it's exciting to see the momentum, that the snowball's really kicking in there. So thanks for...
Yeah, so the Ethereum ecosystem has by far the most developers of any blockchain ecosystem. It's got to be by a couple orders of magnitude. And we're not at 1 million yet. We might be at a small number of hundreds of thousands. And we've actually had to take a look at what the definition of Ethereum developer is. What does it mean to be an Ethereum developer? Does it mean you're writing smart contracts 24/7, 365? Or does it mean that you have smart contract writing capability, or you can write JavaScript that interacts with smart contracts on the blockchain, or do various other things, and that should be, as a developer, that should be one of your tools. It should be an element of your toolkit. And so we see Python, Go, Rust, Java developers that can be protocol level developers. We see financial nerds that can start doing things called no-code programming, where they're essentially moving around these little building blocks and wiring different protocols together. It is programming, roughly the same as working in Excel is programming. And so there will be many different kinds of programmers that probably consider themselves Ethereum programmers going forward. And so I don't think it'll be that hard to get to 1 million over the next year or two.
It's exciting that we're seeing all these different versions of people just seeing blockchain and crypto as a tool.
Sure.
And that doesn't necessarily mean that you're a developer. It just means that you found a way to use a tool to solve a problem.
Sure.
That's exciting.
Yeah, there's so many people who can build on the internet of information called the World Wide Web. And this is a new paradigm. It's the internet of value, and the protocols for the internet of information, they're HTTP, HTML, SMTP for mail, TCP/IP. They're all very horizontal. They cross-cut lots of different things, and the decentralized protocols, Ethereum and other related decentralized protocol technologies, they'll be very horizontal. People will be building everything on those protocols, and essentially, just like a developer thinks of them, or just like a website developer thinks of themselves as a programmer right now, even if they're not like writing JavaScript code or Java code, we'll see many different kinds of programmers that are building things on these networks.
That's cool. Well, Joe, thank you so much for taking the time today to speak and share your insights, and enjoy Paris.
Cool.
And we look forward to hearing your announcement tomorrow and all the exciting things to come this year.
Awesome.
Thanks.
For more news and updates, follow us on Twitter